Santa comes next week. Can you believe that? Holy smokes. And right before Santa came, we got, I would say, a gift from the Fed. So maybe we were on the naughty list because even though we got the rate cut yesterday, we ended up with a lump of coal in the stockings. So let's dissect that. I'll tell you why. We'll go through that real quick, and I'll do my best not to bore you, but I do think this is very important stuff to know and interesting stuff. So in short, folks, here's what happened. Rates are now back up in the low sevens. They've been hovering that low high six lately, now in the low sevens, and here's why. Look at this. Nasty. Gross. Look at that big red drop as of yesterday. Remember, in this instance, in the top chart, down means higher rates. Bad. No bueno. So you see from about December 9th, right there, we've turned the corner. We told you this last week and week before that it's going to be really hard to break above that purple 100-day moving average. So that's a formidable opponent. And we've been locking. You see the little locks right above it? We've been locking routinely for the last couple of days as much as we can for anybody new that comes in. Because again, we just didn't think we were going to hold that run. So yesterday, you think, oh man, the Fed, they came out and they actually cut rates, and they did. The difference is they don't necessarily control our mortgage rates. They do control just the cost that they lend to banks, and that's the Fed funds rate. And they did cut a quarter, so 0.25%, which means overall that rate's 4.375. So people hear the headlines like, oh, rates are lower. Cool. Those are. But mortgage rates, as I just showed you, got kicked in the gut. And the big reason for that is the Fed basically said, and I'll switch the slides here. You can see how much the Fed's come down. And look at the 80s, by the way. Side note, rates were, the high 18, 19, almost 20%. Crazy. But you see how fast the Fed went up, and now they're coming down. You see the little step down on the far right part of the trade. I'll zoom in here just a sec. Check out that dot plot. See the little dots on the right part of that? The next one's going to show you that in more detail. That's projecting where they think the rate's going to be at the end of next year. So why does that matter? Why did we get punched in the gut all of a sudden? They cut a quarter. That sounds like a great thing. Basically, the reason being is they said in their statement, instead of doing what they thought would be 4 cuts, meaning a full point next year, they basically have been moonwalking back. And we've been telling you that they probably would and have been to where now it's 0.5%. So only 2 cuts. So 2 instead of 4. And the market's like, oh man, it stinks. And they're so surprised. I don't know why they're surprised or not paying attention, but yet that's what happened yesterday. So the dot plots on the left side, you see what it was back in September. 3 months later, here we are in December. So the difference is, look at the dot plots, like where they thought rates would be next year. And so look at the left graph or the left chart. You see that there were 6 members that thought there would be about a 100 basis point cut or whatever, 100 basis points lower, or in another 6 that said even 125 lower. And then 2 crazy aggressive people thought rates would be 1.5 lower. Well, now look at the right. All those dots have shifted up to where almost the majority think that now rates for next year are only going to be about a 50 basis point cut or 2 cuts. 10 people think there's only going to be 2 cuts next year. So of all the folks on the Fed, they're all basically saying, yep, 2, as opposed to what looked like a fairly spread out somewhere between 3 and up to 6 cuts. So that's why the market's reacted in such a way. The Fed has also said that they feel like the unemployment is going to be relatively good in the sense that it's not going to move too far or too fast. They do think that the economy is probably doing better than expected. And while they're supposed to, their dual mandate is to keep inflation low or maintain, a healthy amount of inflation, and to try to keep unemployment low. So keep inflation low while keeping unemployment low. And that is a balancing act. Well, they basically said their focus is going to shift over to inflation. Less concerned now about employment. You can see the numbers. They're basically saying, hey, it could go from 4.3 to 4.4, somewhere in that range. They just don't see it going above 4.5. So as a whole, they think unemployment is going to be fine. So what do they see from an economic piece? Like what's happening? Basically, and I'm not going to go into all these numbers because they're kind of boring, but they do see these numbers, the GDP's economy, right? Gross domestic product. And then the bottom line, the bottom number, the core PCE, what they're measuring, they saw it in 2024, it went from 2.8 to 2.6. They think in 2025, it's going to be 2.5 to 2.2. That's their goal. And that's what they want, but they're going to maintain that because inflation numbers And this is the revision, by the way, from just last year to this year, where they're now saying it may be a little hotter than expected. And to do that, that's why they're pausing and not going to cut rates in January's meeting. So there you go. So long story short, I do think give it a couple days, a couple weeks, the holidays pass. Maybe we get back some of the losses we just had, but rates right around that 7% range, based on that last chart we saw, seems to be the norm. And I think it will be, through probably the better part of Q1. Time will tell. We will see. It turns out this year, my prediction for 2024 was good. Remember last year I was off. This year it sounds like I was good. Everybody said rates are coming down. I said, no, they're not. So I wish I was wrong, but I'm not. So now for the fun stuff, let's just do 3 or 4 slides on just kind of media entertainment area. Here's the birthplace of Heisman Trophy winners since 1935. My goodness, like that is just incredible. Maybe all the the Montanas and the Dakotas are playing hockey. I don't know what's going on there, but I just thought that was really interesting. So Texas, hook them. So 9 winners from Texas. For the Ruby Red Slippers, I went and saw Wicked with my girls, and it actually was really good. It was 2.5 hours, which scared me. I was like, oh man, that's only part 1. Still a really good movie, and I'd already seen the play twice. But check this out, the Ruby Red Slippers, which, by the way, fun fact, were actually silver in the actual book, but $28 million. Crazy. There you go. And there's some other stats about the movies. Back to the Future. I've seen these replicas for sale in stores, but apparently the real ones sold for $237,000 here in Dallas. So good for them. And then lastly, the meme of the week. I thought this was funny. The Hangover. Me and my boys celebrating a great refi boom of 2024, not knowing it was only going to last 12 days. That is funny because the Fed, when they first cut in September, things did drop. They got to the low 6s, if you recall. We told everybody who we had queued up, like, let's go, be ready. For those that paid attention, congratulations. You got an awesome rate. You're saving money. Pay attention in the future. If you guys have questions or want help, certainly follow us, subscribe, share, all that fun stuff. If you got questions or know somebody who does, please reach out to us. We are here to help. Hope you have a great and wonderful, safe remaining of 2024. I'm sure we'll have a video for next week's come out. Wishing you a Merry Christmas, Happy Hanukkah, Kwanzaa, all happy holidays. And we will see you most likely, potentially, in the new year. Have a great day. Happy 2024.